But so I want to talk about credit and emerging market credit, and we're lucky that we have uh, Jerry weighing on. So of High 2 Global. So one of the things that's interesting is that we've seen like many different variations of emerging market credit, and we've seen people have come along with micro lending, and then we've seen a lot of lending. Actually, we had a fintech startup about 4 or 5 years ago that was doing lending on a very large scale in India, because there was a big spread between Indian credit lending and the rates that they could get capital at. So they think they had a risk arbitrage. So I'm looking forward to Jerry's presentation. Before Jerry gets started, I just want to remind everybody on the 12th and 13th of January, we're going to be in Palo Alto, California, and we'll have a couple of people live, and then the rest will be virtual. We expect to have a very large audience for that. Last year sold out. And again, looking forward to what Jerry has to say. So Jerry, why don't you introduce yourself, and then we'll go from there.
Awesome. Thanks, Marty. It's a great setup and a great view too. Yeah, I really admire that. And I'm right now I'm in New York, kind of like cold, but it's sunny. I prepared about 15 pages slides and cover about like 15 minutes. I hope that's all right. And do we get Q&A afterwards, or I just go through the the introduction? I guess I'll just get started.
Yeah.
Yeah. I have two parts. One, I'll just give a brief introduction of private credit. So what it is and what it does and why do we want private credit. And the second part, I'll just go over a couple emerging markets we've done business in Southeast Asia, and Africa, and Latin America. And I'll also give a couple case studies and some investments we made, and hopefully we can generate some ideas and among the panelists and attendees. So private credit, so as its name implies, and this is private traded credit, and we usually structure privately too. The biggest benefit in current environment is the low correlation, with the public market, with stocks and bonds, and also we can structure the way to lower the risk, lower the duration, and enhance the return. There's a multiple ways we can, how do we structure the product is up to us. In private credit, and there's tremendous amount of opportunities, and the major ones are direct lending, consumer lending, and asset-backed, and infrastructure loans, real estate debt, mezzanine debt. So it's a huge market. The market has been around for a while, but the major growth has been since the last credit bubble, back in 2006, 2007. And as we can see, the AUM growth has not been impacted by the global financial crisis. Actually, it's accelerated the growth. As we know, all the financial institutions has been tightening up, and more borrowers and the individuals and small businesses and has been relying more on private credit. This is a projection made by Prekin last year. They expect that the AUM in the market will accumulate to $1 trillion. It is becoming more a significant player in the financial market. And as for next year, as we know, with the vaccine, the pandemic hopefully will be over sometime next year. But private credit will continue to grow, play a huge role in the restructuring of the industries and the financial markets. So in the past 13, 14 years since the last credit bubble, the market has been more than doubled from less than 2 trillion to over $5 trillion, and this year. So we expect the next year it's going to be another expansion year. Consumer credit is part, as I just shown, is part of the private credit market. It's focused on consumer spending. We have mostly target two areas. One is installment loans, and some, the student loans, personal loans, and auto loans. Some are revolving credit, like credit cards. And in terms of risk profile and absolute terms, it's like fall into the middle. So after the brief introduction, I'll just go into the emerging markets. Why we are interested in emerging market? As we can see from the chart, the family debt level is still low in the major emerging market. For example, Indonesia, Malaysia, Vietnam, Philippines, those are Southeast Asia countries. The household the debt level is still low, and they can borrow to spend. That's unmet demand and in the emerging market. So the first market where we spend a lot of time on is Southeast Asia. So I go to, Jakarta and Singapore, Hong Kong, and a couple times a year. I used to be like 3-4 times a year. I haven't been, this year. I'm planning to go back. I don't know, during the summer probably. The size are significant. So another tailwind is like ASEAN countries. They just signed up RCEP, the trade partnership with China, South Korea, India, not India, Japan, and Australia and New Zealand. So that will greatly improve the trade between the partners. So the GDP growth has been stable around like 5% every year, and a huge population. So we definitely see the dividend and paying, and particularly after the trade friction between China and US, and a lot of those manufacturing jobs have been shifting to Southeast Asia countries, Vietnam and in Indonesia, Malaysia. So there's a huge opportunity between the growth and the unmet demand. And as we can see, the penetration rate is really low in those countries. For example, the credit card penetration rate is 2 in the US, meaning like everyone has 2 credit cards. And in Indonesia, that's like really low. So every 15 people has 1 credit card. So we definitely see a lot of demand in terms of like consumer personal credit. So one platform we've been working with since 2016.
My fucking screen.
What's that? Oh, it's not. Okay. This is the platform. It started as an e-commerce platform selling cell phones, smartphones. So the trend has been started around 5 years ago. All the emerging market countries have been upgrading their phones. They can't afford to buy, iPhones. They're buying a cheaper Chinese product like Oppo, Vivo, Huawei, Xiaomi kind of the phones. So the platform set it up to sell cell phones and through, and also offer installment loans. For example, the smartphone is selling about like $200, and they can just put down, say, $50, and they can borrow the rest and through the installment loans. Because they don't have, a credit card, they can borrow from the banks. And so this is a platform we've been working with in the past 4 or 5 years. It has been growing really fast. Well, it's not at the size of Shopee or Lazada yet, but it specializes in electronics and the consumer lending. Go over to Africa. So Africa has been significant and has tremendous growth opportunities too. And we just discussed about the credit card penetration rate. It's even lower in African countries. For example, Nigeria, it has like 0.01%. It's like every 1,000 or the 10,000 people has 1 credit card. So it's minimum amount. And there's huge growth potential because the young and the population is a 1.2 billion people over there. The next to India and China.
Hey, Jerry, can I just do a quick interruption? I mean,
yeah.
Is all this credit denominated in dollars or?
Yes, everything's in dollars. Yes.
Okay. And I mean, how do you de-risk, economic downturns and things like that?
Yeah, I can cover a little bit. So, for example, there's the diversification benefits to the investing in emerging market, and we can see the weakening dollars and the deficit in the U.S. We see the capital flow back to the emerging market. So when the pandemic hit, all the emerging markets, for example, the Indonesia, Vietnam, their local currency depreciated dramatically. So now it's recovering, partly because the capital flowing back to emerging market, and partly because the U.S. dollars has been depreciating, and the dollar comes down dramatically. Most of those are macro factors. So we protect ourselves mostly through the structures. So we have guarantees from the local platform. For example, the cell phone installment loan platform we've been working with, they use the cell phones as collateral. So even though it's sold to the consumers, they had to pay it back. If they can't pay it back, and they had to turn in the phone. And also the platform, the largest shareholder is Ant Financial. It's getting the news a lot because government regulation stuff. So they own 20% of the platform. So when the platform provide guarantees for the principal and the interest, and there is a huge trust in go into the equation. And this is how we protect ourselves through due diligence and the structures. And also we have technology platforms, so we tie to their lending systems. We can pull in the data every day, and just checking what's the delinquency rate is like, and how many loans you made this week. So we have it's more like a manager model. So we don't tell them how much loan they can issue, but we definitely have the data on a daily basis. Yeah, so continue on the Africa market. We have a couple investments over there. We also have a cell phone platform working with the Transsion. Probably not a lot of people heard about the brand, and it's a Chinese firm. They have like 48% market share in Africa. So it's a huge cell phone maker in Africa. These cell phones, we work with similar installment loans. This is a different supply chain financing platform. The team was set it up in Africa like 5-6 years ago, selling the construction products initially, and we set up a joint venture with them, produce and trade a local healthy food product. For example, cassava, that's like the local flour. It's kind of healthy product, and protein, and the cashew is mostly sold to Vietnam and the Chinese markets, not into the US. We can see from the picture, so we have hired a lot of local female workers and help to grind, deshell those cashews, and so this is more help local production financing. We lend to them. They buy equipment, they buy trucks, and they buy land, they grow and manufacture and send them to the ship to Vietnam and then ship to China. This platform.
Hey Jerry, I got to interrupt again. So you talked a little bit about fintech and about where your deal flow comes from. Is everything derived from like electronic platforms, or do you have feet on the ground in all these places?
Yes, we do. So we usually form up like local joint ventures, and for example, this is like joint venture between us and the local team. And for us, our investment team is based in New York, and we fly in every quarter to do on the ground due diligence, but the operations is by the local team, and we source through all the networks, but we manage through the technology platforms. Like I mentioned, all those shippings, we have those receipts and everything come in. We have all the the financial documents and shipping data consolidated in our platform. So it's not like we're a lender, give you the money, just do whatever you want with it. So we have all the details, and so for example, how many people they hired this month, and how many the raw cashew nuts you bought this month, how many shipped to the port. We have all those information in the system. So it's a hybrid, I would say. It's technology enabled and investment strategy. Moving on to Latin America, so we're mostly in Mexico now. So part of the reason because we can't travel to Asia, Africa, and I haven't been to Mexico yet. And we have a local team So one of our directors is local, Mexican. He moved back to Mexico City last year, and so that's how we set up. It's also a joint venture, and in LATAM. Um, uh, as we can see, it's a huge market, and we like the cell phone penetration rate is even higher than Asia Pacific. And like I said, we like those market with huge, mobile penetration, but low mobile lending or payment. So that's where we came in. We have the technology and the capital. So we work with the local team to capture the local market opportunities. And we just set up a consumer credit platform this year. So we've been planning this over the summer, and we found a team. It's a former Capital One team out of Washington, D.C., and they also have a back office in Chengdu, China. So the technology company is in China. The finance team is in D.C., and then we formed joint venture with the local Mexico City team. And it's just more like a virtual credit card product, and just for for the small business owners, and then for the in middle class individual, they can borrow shorter terms, and it works like a credit card. Yeah, so emerging market, we continue, we're still confident in emerging market for the reason I just mentioned. We definitely see the diversification benefit and to allocating into emerging markets, and also the growths are stronger, and definitely we see the risk premium is higher, and we're earning about 12% to 14%, and on long on the yield, and protected by I just mentioned the collaterals and the guarantees, and the average duration is about 4 or 5 months, and the shorter terms, and so we really like the market. We continue to invest. We invest in those emerging markets through a credit fund we launched last year. It's a Delaware and Cayman Master Feeder Fund. As you can see, the return has been stable during the pandemic. We returned about 1% a month, and we had a hit in couple months ago, like August, September. It's not because the investment, it's because we had the redemption from one of our limited partners, and so we had to get cash back, and we're back on track to returning 1% a month. Those are consumer loans, and the equipment loans, and the supply chain financing I just mentioned.
Hey Jerry, how big is I2? You're probably talking about this right now, but how big is I2 Global?
So we manage about 160 million, and through different strategies, and we have a pre-IPO strategy, investing like Uber, Didi, and Pinterest, those companies before they go public. We have this credit strategy. This is we just launched last year. It's about 14 months old. We manage about 20-30 million, and from mostly family offices, a lot from Singapore, Hong Kong, and Taiwan. And we don't have family office clients from the US yet, because I spend half my time, in emerging market Asia. Half of the time, I spend more time here in New York. That's why, I get down the Ivy family office network.
And Jerry, what's the duration of your average loan?
So there are two durations. One is in the fund. Usually we structured about around 3 months. And some are underlying loans are some are like 6 months, some are 1 month. And so every duration is short, and actually even getting shorter during the pandemic. And we shorted to 2 months right now. So it's a bit ahead on the returns, but we get better liquidity. And for the fund itself, it's 30 days notice and the monthly liquidity, so you can get money back in 60 days.
Keep on going.
Yeah. So that so we Hydro Global is a New York firm, and we set it up 6 years ago here. Before that, I worked for 2 endowments, Notre Dame Endowment and Wesleyan Endowments, and on the limited partner side. And before that, I was a venture capitalist. And so we set it up as more like a technology-enabled global asset allocation platform. So we have different asset classes that I mentioned, credit, and we have venture fund. It's pretty small. We do a lot of incubation, those emerging market platforms, And we also invest a little bit in real estate and technology stocks, etc. So we have 2 offices, one in New York, and we have dozen people investment team. We have like 25 in Beijing, mostly back offices, and we also have Singapore, Hong Kong set it up. But we cover those emerging market, mostly travel and working with local joint partners.
And just my last question is, what's the typical interest rates in some of these markets, like in the Philippines? If you go to traditional lending, like a bank or something like that, you go
It's crazy. You don't want to hear. It's really, really high. And I heard the story. So Philippines, when you borrow, so the mortgage rate is around like 15-20%. Think about it. So you double your, the interest is equal as a principal every 5 years. And people still borrow, a 15% mortgage rate. And not a lot of people qualify. Just crazy. That's why we have.
So are you leaving money on the table?
Well, it's not. It's like those traditional banks, they have high costs to maintain, and they don't work with low income or mid income families. So it's always serving the state owned enterprises, large enterprises. They give lend money to those who don't really need the money, and it's the same thing for China. So we're serving more like the mid class individual, the small business, and they have no way to borrow money and to expand the business or cover the living expense or the education cost.
And are most of these businesses like B2B or B2C, or I mean, you're not lending money to restaurants, right?
We don't do direct lending, so we work with local platforms, and so they structure the loan, issue the loan. So we buy the fund buy the package of loans. Mostly collateralized, like I mentioned, cell phone loans. Some are equipment leasing. So they buy trucks and use the truck as collateral, borrow from us, and they pay it back. You can't believe the payback return. It's like you get money back in 6 months. So just so popular too, because the transportation cost is so high.
And you're getting it back in dollars. Yeah, that's great. One question from the audience, which is, what's your geographic distribution?
So we're heavy in Southeast Asia, heavy in the US, and we're more concentrated on Africa now. And we're just getting started for LATAM. So more than half the capital is allocated to Southeast Asia. India, Indonesia, those like large population. They also grow fast.
And Jerry, I mean, we just know that we've done a lot of trade finance panels here in Miami, so we know there's always a big trade finance issue going on, especially in today's market where so much global trade has kind of come to a halt. But I'm out of time, and I just need to move on. So This is just a great presentation. There's a lot of interested people. If you can just follow up through the chat sessions and the question and answers, you can respond to people. And please don't forget to send your contact information to everybody through chat, etc.
Yeah, so I have the email here, hydroglobal.com, so you can reach me from the website. Thanks, Marty. Appreciate it. It's great sharing with everyone.
Thanks, Jerry. Great job. Thanks so much.